Hi, I'm Bill Moore, and I'm on a mission to bring alpha to your trading through the power of relative value analysis. If you're looking for more candlestick patterns, then you're going to have to look somewhere else. But if you would like to start trading like a professional, then stick around. So we went back to our 11 baskets of the sector ETFs today. We ran a lot of pairs there, and hence we set a lot of filters. We have the correlation at 0.8, RW coefficient at 0.8, at least 1.25 standard deviations away from the mean, a minimum of 3 winners historically, and an expectation value of 5% up or down. So with that, we still ended up with quite a lot of things to look at, but the one I'd like to look at today is in the financial services sector. So let's go take a look at that one. It's got a really, really nice looking picture, particularly for the past, let's say year and a half. It had a pretty big jump up though just recently, and I actually didn't even go check to see why, because it has had such a good past behavior that even if it doesn't come all the way back down to the mean, I think coming back down to the first standard deviation line is still probably very acceptable. So it has just recently jumped outside the second standard deviation. It looks like it's had a little move back towards the mean today, so we're going to see what it does tomorrow. It has a track record that is perfect, right? It's been outside the second standard deviation 6 times, returned to the mean profitably 5 times, and the 6th one is the one that is currently out here. So let's add this to the observe page. Okay, so yeah, that perfect picture that we were talking about, it does have gaps periodically, right? But even with the gaps, apparently it's still strong enough to get back to the mean. So a gap here and back to the mean, a gap here. We've just recently had this gap. So in any case, everything does look good. It had a move down today. So perhaps tomorrow, if it continues that, it's time to jump back into this. It's just under the second standard deviation at this point. Let's look at it in the hitting probabilities. Okay, very good mean reversion, nice and solid. Let's run the Monte Carlo simulation. Most recent price at 4.558, let's say. And half the time we'll be getting back to the mean from that price in 31 bars or less, and the mode being 19 bars. Those are very acceptable numbers, although probably we wouldn't target all the way back to the mean, but we'll come back and look at that in just a moment. It says, as far as 30 days out, that we will be below, because it's a short, we'll be below the current price 93% of the time. So very strong numbers and basically a 5% expectation value in 30 days. So everything looks really pretty good in here, right? Everything looks nice. Let's set this for 250 instead of the mean. And at 250, the mode's only 10 days, so even better, right? Very, very strong. So in any case, this looks good. Let's go take one more gander at it in the detail page. A very, very good picture. It's had a gap up and a strong move, but a move back down today. We're talking about BBT minus BK, trading with a ratio of 0.95. The correlation is 0.94 and RW coefficient 0.83. Very good numbers. A perfect track record. Everything looks good. This is going to be the recommendation. Today, BBT minus 0.95 of BK. It is a short, so for every share of BBT that you sell, you're going to buy 0.95 shares of BK. Good luck with your trading.